Hi guys, welcome to the channel. This is Sanket, Jain. Today in this video we'll be covering chapter number 6 or chapter 5 in the new module called decision making in a very quick manner. So I'm going to get started right away with our first topic from this chapter, which is called CVP based analysis. Now the common formulas that are used in CVP based analysis are: first is break even sales plus margin of safety is equals to total sales. You should remember this. Break even point in sales plus margin of safety is equals to total sales. Second is break even point in units is fixed cost upon contribution per unit. Okay, FC by contribution per unit. You should remember all of these things. Break even point in sales plus margin of safety is total sales. BEP in units is equals to fixed cost upon contribution per unit. You should also remember, if you want to calculate BEP in terms of sales, what you have to do is you have to identify BEP in terms of units, multiply it with the selling price per unit. Now if you look at it, if you look at the formulas closely, you will get another formula for BEP in sales, which will be fixed cost upon PV ratio. How, sir? So there is contribution, there is selling price. This, if you look at this closely, BEP in units is fixed cost upon contribution per unit. Put this formula here. So this will be fixed cost upon contribution per unit multiplied by selling price per unit. So that is selling price by contribution multiplied by fixed cost. Selling price by contribution is 1 upon PV ratio, right? So fixed cost multiplied by 1 upon PV ratio is fixed cost upon PV ratio. You get BEP in sales. These are the formulas, you should remember them. Our first topic under this head is activity based CVP. What happens under this kind of under this topic, the types of questions that come in have changing number of setups or number of batches that affect the break even point. Okay, they are identified on the basis of activity based method, and these are identified out of the fixed cost which was there under the traditional system. I'll take you to a question to give you an example. Okay, quickly, let's look at this question. We have been given that the contribution per unit is rupees 5. Production number of setups per production period is given as 42. Cost per setup is given as 450. Production units per run is given as 960. So number of units you are producing per batch or per run is 960. Engineering hours for production period is given as 500, and cost per engineering hour is given as 10. Okay, then other things what you have is, first of all, the changing scenario also has the cost as 5. The number of setups per production period have to be calculated, decrease by rupees 90 cost per setup. Production units per run are changing to 1008. Engineering hours for production period are reducing to 422. Cost per engineering are nothing given. I'm going to assume it to be same, 10 rupees. Company has begun activity based costing of fixed cost and presently identified two cost drivers. One is production run, second is engineering hours. Okay, so what I said in the marathon thing was that it was there as fixed cost under traditional system. Using activity based method, they have identified the number of batches or number of setups, etc. Okay, so now they are telling us that they've identified this using ABC of the total fixed cost, whatever the total is. Presently 96,000 after the above 70 to 100 remains to be analyzed. Okay, so 72,100 is remaining to be analyzed, so it is other fixed cost. There are changes as proposed for the next production period for the same volume of output. So the volume of output is not going to change. Let's calculate the volume of output first. I'm going to solve it right here for you to quickly just cover this question up. Volume, okay, not value. Volume of output is going to be, if you look at this thing closely, there are 42 setups and you are producing 960 units for each and every setup. So what you get is 42 multiplied by 960. Now, when I have to calculate the new or the proposed number of setups, what I will do is I will divide this volume by 1008 to get the number of setups, right? So the new number of setups is 42 into 960 by 1008. This will come to 40 setups. So you get 40 setups. Okay. Now calculating the fixed cost. So we had 42 multiplied by 450, then we have 500 multiplied by 10, and then we have 72 100. All of this divided by 5, current number of BEP. 5 is the contribution per unit, right? So fixed cost upon contribution per unit is break even point in units. Okay, so 42 into 450 plus 500 into 10 plus 70 to 100 divided by 5, current number of BEP units. Proposed 40 multiplied by 450 minus 90 is 360, so 40 multiplied by 360, 422 multiplied by 10, and 70 to 100 as it is. Divided by 5, you get break even point in terms of units for the next period. I'm just going to calculate it quickly. So 42 into 450 m plus, you can solve it with me. 500 multiplied by 10, 5000 m plus, and then 70 to 100 m plus. You get 96,000 divided by 5, you get 19,200. This is the current level of BEP in terms of units. Okay, 19,200. Proposed, let's see, 40 multiplied by 360 m plus, 422 multiplied by 10 m plus, you get 18,620 divided by, sorry, plus 70 to 100. Divided, this gets you 90,720. Divided by 5, you get 18,144. Okay, this is the break even point in units. If you also want to calculate the break even point in terms of batches, how many batches you have to produce, you can do it. 19,200 divided by how many units are you producing per batch? You are producing 960. So divided by 960, you get 20 batches. Okay, 20 batches. Similarly, the other side, 18144 divided by 1008, you get 18 batches. You seeing the break even point in terms of units and in terms of batches is to be calculated in this way. Alright, got it? Moving to the next type of question. Then the next type of question comes from conditions of uncertainty. Okay, so condition of uncertainty is basically that if the question is given that you have a mean score, alright, let's say a mean number of revenue, alright, and they are asking you what is the probability of you earning a revenue of more than a particular number, okay, and standard deviation is also given to you. Then how will you calculate the probability? That is conditions of uncertainty. So the formula used is Z is equals to X minus mu upon sigma. Z is the Z score that you have to calculate, mu is mean, X is the given number, and sigma is standard deviation. This is the formula that you have to use. Z is equals to X minus mu upon sigma. Now, mu is mean, X is number, sigma is the standard deviation, and Z is Z score. You have to calculate the Z score first. On the basis of the Z score, you will be able to identify the probability. How? So you would have to look at the Z table. Okay, looking at the Z table, which is basically this is governed by the principle of normal curve. The normal curve, okay, that we study in CPT, then I think also in Inter, and then definitely in SFM. You know what normal curve is. So conditions of uncertainty is governed by the principles of normal curve. You have to calculate the Z score, and then you have to calculate the probability on the basis of what the Z score is. Okay, let's quickly check out the question, but before that we have to read this paragraph. Using Z table, a probability of the Z score is identified. If the question asks probability higher than the number which is higher than X, then answer will be 1 minus probability. Whatever the number you get from the Z table, you have to deduct it from 1. So answer is going to be 1 minus that probability, which is your final answer. Now, if the question asks lower than probability, okay, so lower than X, probability of the revenue that you earn lower than X, then the probability number that you get from the Z table is the answer itself. Alright, so let's look at a quick question for it. Here you go. You have conditions of uncertainty. Let's look at a particular question. This one from ICA. You can see the selling price of a product for the next accounting period is 110. Variable cost is 70. Budgeted fixed cost for the period are 163,500. Sales is 5,000. Assume that the probability distribution for the estimated sales quantity is normal with a standard deviation of 125 units. So the standard deviation is given in terms of units. Okay, it's better that we convert everything in terms of units. So 125 is the standard deviation in terms of units. You know that the estimated sales for the period are 5,000. Okay, what you have to do is, what is the probability of profit being greater than 40,000? 40,000, if you have to earn the profit of 40,000, what is the probability that you will earn more than 40,000? Okay, now what you have to remember is the probability number that we're going to get from the Z table. The final answer is going to be 1 minus that number, because they are asking more than, greater than. Okay, so the calculations will be such that we will multiply 5,000 units, okay, multiplied by 110 minus 70. That is our contribution. So 5,000 multiplied by 40, right, minus the fixed cost. Minus the fixed cost, that is 163,500. That is how you get profit. So for 5,000 units, the profit that you are earning is 5,000 multiplied by 40 minus 163,500. You get 36,500. That is your profit. Now the change between the two units, okay, if you sell 5,000, if you sell 4,500, if you sell 4,000, whatever, the change that is going to happen in the profit is going to be due to contribution only, because your fixed cost is fixed anyways. So the change in profit is only because of the change in contribution, because the only two things changing are selling price and variable cost, because the fixed cost is fixed, right? So standard deviation is given as 125 units. So I'll multiply it with 40, because standard deviation denotes the change, right? So 125 multiplied by 40, you get 5,000. Now the formula was Z is equals to X minus mu upon sigma, right? We have to calculate Z. The number is given as 40,000. We have to calculate something more than 40,000, right? So X is 40,000. Estimated is 5,000 units. For that we calculate the profit to be 36,500. This is our mean. Okay, this is our average, 36,500. Upon sigma, we just calculated the contribution on 125 units, that is 5,000. So Z comes to Z is equals to 0.7. Now you will open the Z table, look for 0.7, find out the probability, whatever the number comes, the final answer is going to be 1 minus that. So let's say at probability Z is equals to 0.70, the number comes to 0.7580. Okay, the number that you can get from the Z table is 0.7580. So my final answer is going to be 1 minus 0.7580, that is 0.2420. Okay, so there is a 24.2% chance, 24.2% chance that I will earn a profit of more than 40,000. Got it? This is conditions of uncertainty. Looking at another type, service organization. Now in case of service organization, what we have to do is we have to either calculate the total cost, add a margin, find out the price per service unit. For example, the question that is given by the ICI, I'm sure you have already solved all the questions, and then you are looking at this video, because only then it is going to help you the best. So service organization, what you are required to do is you are supposed to calculate either the total cost, then add a margin, find out the price per service unit. The question that is given to you in the SM is going to ask you to calculate fare per passenger kilometer. Okay, or there could be another type of question where you might have to calculate the break even point. So just the way how we used to calculate in activity based CVP, same way. Alright, moving to the next type under CVP based analysis. GIT environment. Under GIT questions, what you have to do is calculation is more or less similar to what you've done in chapter number 3. Either you have to decide between GIT or normal, or you have to decide between multiple GIT options. Okay, if there are multiple vendors for offering GIT, then you would have to decide between the multiple options that you have. Then there comes a part which is, the non-financial or the theoretical part in this chapter, which is ethical and non-financial considerations. Looking at the non-financial first, so the points to be considered under non-financial considerations would include quality, employee satisfaction, customer satisfaction, CSR, environmental factors, intellectual property or intangible assets, competitors' movements, and brand name. There are certain limitations of non-financial information. First, it is the time and cost of the company that is involved under identification of the non-financial information. Okay, it's very difficult to uh, accumulate non-financial information and then measure it. Subjective measurement, okay, based on your opinion. Improper measures can lead to attention on wrong objectives, lack of statistical reliability, not quantitative easily. Management disintegration when excess of measures are used by the company. If you are using more and more number of non-financial measures, then management might disintegrate from the original objective, from the corporate objective. Now, whenever you get a question from ethical consideration, and if the question offers you an unethical financial plan, okay, remember this very carefully. Ethical consideration question. The question is offering you an unethical financial plan. There is a financial plan being told to you, but it is not ethical. The plan will look definitely good to you from the financial point of view. From ethics point of view, not good. How are you going to frame your answer? Okay, let me tell you first, all the answers are different. Ethical consideration, no answer is same. But there is one part which is same and that you could take advantage of. So, if there is an unethical financial plan, you could start or you could use the below lines in your answer. First, primary goal of investor owned firms is shareholder wealth maximization, right? Which translates to stock price maximization, correct? Management consultants plan, which is the unethical financial plan. Okay, so management consultants plan is looking good for the company. It is a good plan, right? It's looking good for the company as there is a positive impact on the profitability. Also, company operates in a competitive environment. So for its survival, it has to work on plans like above. But there is a second side of the coin which cannot be ignored, that is business ethics. And then you can continue the rest of the case. Alright, this is how you might want to frame your answer. ICI is constantly using this language. They've used it in two types of questions which have both have a financial unethical plan. Both are looking very good for the company from the financial point of view. From the unethical point of view, definitely they're not good. So that is how they are using these lines to frame their answer. And then they're talking about the other things. Now, under short-run decision making, our first topic was outsourcing. You have to decide if you want to outsource or not. So the question will offer you certain irrelevant costs like fixed cost, permanent labor cost, etc. for calculation of cost of self-manufacturing. Okay, if you self-manufacture, you would have to calculate the cost. If you want to self-manufacture, there will be certain irrelevant cost. So these irrelevant costs have to be ignored. Only the relevant costs have to be taken. Now that is compared with the outsourcing or the purchasing cost. Okay, remember very carefully that every time you answer or you calculate something for outsourcing decision, always write the non-financial aspect also. So the question also has to be answered from the non-financial perspective of outsourcing. Okay, next, sell or further process. Any cost incurred before the split up is a historical cost and therefore it is sunk cost. The products have been split up already and only after that you can decide to further process. So any cost before that is historical and irrelevant. The only relevant cost will be to further process. So the decision would be taken on the basis that if you have to further process, the cost will be involved. But if you further process, what will be the increment in the sales price due to further processing? So the increment in selling price due to further process has to be compared with the further processing cost for making decision. Focus on the word increment, because if you don't further process, you can still sell it. For example, then if you further process it, there will be increment in the selling price. So we are considered only about the increment, because we are talking about if you want to further process or not. So because of further process, my benefit is going to be, let's say, 5 rupees, but for further processing my cost is incurred at 6 rupees per unit. I am not going to further process. But if it is vice versa, I am going to further process. Alright. Next type of question, minimum pricing. Remember certain points. If the material is given to you, material is available and used regularly, or material is not available at all, you have to value it at replacement value. But if the material is available and not used, realizable value is going to be used. If there are multiple options given, highest if the multiple options are given. Okay, highest one out of them. If labor cost is given and it is told you that it is permanent, then the cost will be irrelevant. If it causes contribution loss, if it is permanent but causes contribution loss because we are switching it from one place to another place, so opportunity cost will be there. Okay, if it is not permanent, has to be hired contractually, definitely it is relevant, right? Next, apportioned or allocated costs are historical. Apportionment of historical costs, so irrelevant. Development cost is also an historical cost, irrelevant. Non-financial impact, you have to consider that how will you price your product in future if you have to, because minimum pricing will ask you to value your product on the relevant cost basis, right? So how will you manage the future pricing, because you will have to increase the prices to cover up your fixed cost and other costs as well, and also what your existing customers will tell you. Okay, because they will feel that their loyalty is being not appreciated because you are charging a new customer minimum price, but they have to pay the same price. Certain points like these have to be always considered when you are answering this question after calculation. Next is keep or drop. Calculate the relevant cost of keeping. How you have to calculate is, think which cost would end if the product is dropped. If you dropped it and if it ended, okay, if you dropped it and if it ended, it is relevant. Okay, it is relevant. If you dropped it, it still did not end. How is it relevant? It is going to be incurred anyways. Okay, so if you dropped it and if the cost would end if you drop the product, those costs are relevant. So you have to calculate the relevant cost of keeping. Compare this with the contribution that could have been earned if the product was not dropped. If it comes positive, keep the product. If it comes negative, drop the product. And always consider the non-financial impacts of keeping or dropping. Okay, our brand image, our customer perception, every other thing. Special order decision, you have to consider the relevant cost and benefits of the special order to decide the acceptance or decline. Okay, consider only the relevant cost, just how we had done in minimum pricing, just how we had done in outsourcing. Consider only the relevant cost, compare it with the benefits of the special order. You will get an answer if you want to continue, if you want to accept the special order or not. There might be certain non-financial impacts that you have to write about. And finally, the last one, product mix decision. Calculate contribution per material unit or per hour based on what is the constraint that is given. Okay, on the basis of that you will rank and then allocate, and then you will allocate the number of hours or the material units, and then you will identify the product mix. That will be a product mix decision. Okay, if there are multiple constraints given, then linear programming would have to be used, and you have one question that you should solve from the linear programming. All right, I have also uploaded the solution of this linear programming question on my other channel, which is Hindi. But if you can slightly understand Hindi and if you're comfortable like even a little bit with the Hindi, you can check out this video for solving the linear programming question with me. Okay, now apart from all of these common types of questions, there are questions that come out of the box from this chapter, okay, out of the blue. And these are the questions which do not have a set format, no preset format. So for such questions, the only thing that can save you is your logical understanding, your logic application, your concept application, and your prior practice of all the types of questions that were existing. Okay, so make sure that you solve all the questions from this chapter. By all I mean every question which is given in the new syllabus, at least that. Okay, so from new syllabus, solve everything from this chapter, and I hope this video helped you to quickly recall all of these types of common topics and what kind of things are happening under these. Okay, so thank you so much for watching. I hope you had a good time understanding this chapter. I'll see you next time with chapter number 7.